Let's get across the headlines driving sentiment this morning. And for that, Kyle Rada from Capital.com joins me, who is live in London. Kyle, thanks for joining us. Look, it was a bit of a skittish session, I think you could say, on Wall Street overnight. Why?
Well, interest rate risks and these concerns about artificial intelligence, return on investment are the themes once again. Obviously, we've got the PCE data coming up, but a lot of the session in Wall Street was talking about effectively what Micron's results could deliver and, whether it would feed into that narrative that, at the moment we're seeing a world of sort of higher costs associated with artificial intelligence, not just the infrastructure, but also sort of the tokens too. And that could affect chip demand somewhere down the line. Lo and behold, if that is going to be the case, it doesn't seem to be demonstrated, at least in Micron results. And we've obviously seen after the closing bell, more or less the loss that we've seen on the Nasdaq overnight reversed and then some. And, potentially a real sentiment shifter there. The other event risk now is obviously that inflation data. So that's going to be incredibly influential too in terms of how the market trades and whether we sort of continue to see this relief rally. But there was event risk to sort of get through. We've got through half of that now, and in fact, it was actually quite a positive thing and should be, reasonably positive for the Asian session as well.
Yeah, we will likely see pressure coming through in the energy complex, at least for those listed stocks. I mean, traders are really keen to push the price of energy down, I guess on, ships flowing through the Strait of Hormuz. But there could still be a long tail when it comes to inflation, right?
There could be, and we'll get a little bit of a sense of that with some of the PCE data that we get out of the States in the next sort of 24 hours or thereabouts. But I mean, we've seen obviously a really remarkable dive in oil prices, and the move sort of gathered pace again last night after Trump's Truth Social post, more or less talking about how oil coming out of the Persian Gulf will not be exposed to any sorts of tolls. He says that the Iranians have more or less acknowledged that. And that's a really significant breakthrough for global markets because, if we have seen one thing that's really driven this drop in oil below 70 this week, less than just the diminishing geopolitical risks because of a sort of a peace deal, but it's the fact that the US is pretty much allowing the Iranians to return to the global economy, to the US dollar, payment system to sell its oil into global markets. And that's something that we haven't really seen for effectively decades and is a very significant boost to supply. So, it's really no mystery that we've got oil below, $70. It's also a good thing for the US dollar too, because it sort of, entrenches, Iran, at least for a little while, in sort of making or selling its oil in US dollars. But it's one reason why perhaps the doves can suggest that inflation may I use the word transitory, is that we have got this incredible dive now in energy prices, and that should take at least some of the urgency from central bankers, especially in the United States, to hike interest rates in response to obviously what is persistent inflation around the world, persistent inflation stateside in particular.
So now that you mentioned the dollar, the US dollar advanced for a third straight day. It's sitting at a 13-month high. I suppose that's part and parcel while we're seeing pressure coming through on gold, which closed below 4,000 per ounce. So how does this dollar story play out in your view?
It's hard to really stand in the way of it at the moment just because the tailwinds are so strong. I mean, there is, I think, still the very strong case that the Fed should hike interest rates in the not distant future, and that the underlying inflation impulse in the US economy remains strong. We've got the energy story. That's still going to be something that causes some stickiness inflation. There is always the risk, obviously, that it will broaden out and impact some of those underlying measures of inflation too, not just the headline number. But if you strip that back, if you look at the US economy at the moment, the labor market doesn't seem to be any impediment anymore for tighter monetary policy out of the United States. And we're seeing some of that strong demand coming through because of this AI investment boom that's having a real impact on prices, and also obviously a very strong fiscal impulse too, which also sort of suggests that rates at the moment are at levels in the United States which can't be sort of considered to be restrictive enough to get inflation down from, well, potentially 3.5% on a core basis if you do look at the forecasts for what is expected to come out of this inflation print today, and then back to that sort of 2% number. So the fact that you've got that, we've also had other central banks in the last week or so, the ECB suggesting that they're not necessarily, or it's not necessarily, in a rush to hike interest rates again. It could be a bit of a one and done. The BOJ's, happily behind the curve. And then again, too, I wouldn't sort of underestimate this sort of oil story that the US is allowing Iran, back into the fold of the global sort of petrodollar system, entrenching, sort of the US dollar a little bit further in obviously global energy markets as being another reason why the dollar's moving higher. So it's really a strong trade, and like you said, it's weighing on gold, it's weighing on silver, which is through $60, per ounce. Bitcoin was through 60,000 as well, and it's kind of that dollar wrecking ball dynamic that's having an impact on the markets right now.
Ooh, okay, it's really really dynamic out there. Also, we've got news that SK Hynix will be dual listing in the US, so that potentially is a big driver today. In the Asian session, we've got jobs data here locally. Obviously, we'll be looking at the commodities complex and the impact on the market here. But, what are you feeling about this Asian session to come?
Well, I think the Micron story has really sort of shifted the tone, and that could be a little bit of an inflection point for some of these tech stocks in the region as well. Obviously, we've seen, a sort of a beatdown in the Kospi, and some of those other pockets that are highly tech exposed or exposed to chip makers throughout the region. So that we've the fact that we've got these numbers, really does allay some of those fears and boost sentiment. But locally, obviously, we're going to be looking at this employment data to see whether, we're in a position still where the RBA is on the balance of probability is going to be a sort of a wait and see situation, because there are those sort of concerns that there's some sluggishness building in the labour market, notwithstanding that sort of inflation data that we got yesterday, which I think was still a little bit too strong, and perhaps despite the headline drop, that trim mean figure was still pretty nasty. But stripping all of that back, the next big thing is that PCE data. If there's further volatility to come and further downside risk in equities, it's going to come because of a spicy PCE print. So I think it'll be a fairly nice little recovery and rebound throughout the Asian session today. US futures should follow that, but there will still be that nervousness from the PCE data, and really that'll be the sort of next inflection point to see whether this kind of recovery in risk appetite will continue, or whether it might sort of unwind once again, really on this rate uncertainty.